earnings. Joining us now is Shana Sissel, Banríon Capital Management founder and CEO. Shana, what's the biggest challenge out there right now for markets that are at records and the S&P just turning green, looking to make another record today?
I think there's some economic headwinds. I know you just talked about what the Fed's going to do next and Fed transparency. The lack of communication from the Fed, this new policy under the Chairman Warsh, is something the market's still digesting, I think. But because we had some disappointing employment information from the labor markets last week, and inflation does appear to be, sticky high, I think there's concerns about a rate hike with softening economic data, and that just leads to increased volatility, especially with less communication from the Fed. And for me, I think that's the biggest challenge for investors right now.
But of course, none of it matters if earnings continue to hold up, and so far, so good. They seem to be.
Yeah, so I think after 2020, and this is something I've just really observed, is that companies and analysts are being much more conservative with their outlooks and their price targets and their estimates for earnings, which has led to more often than not companies surprising on the upside. I can't think of the last time you saw a really disappointing earnings report. I mean, they still happen, obviously, but they're far less frequent than they'd been in the past. And for that reason, I think that we'll continue to see strong earnings, just because I think expectations are kept artificially low. Better to surprise, under promise and over deliver, if you will.
Shana, will this market ever be able to go back to just digesting quote unquote regular earnings, where we see maybe a little bit of a beat and that's enough to make everybody very happy?
See, that gets back to what I was just saying. I think that we've trained investors now to expect a beat because earnings estimates and forward guidance is intentionally conservative. I think companies are, again, looking to underpromise and overdeliver. I think if we went back to quote-unquote normal, that it would actually be a shock to investors. I think we've just gotten so accustomed to the way things have been for the last 6 years. So I would be concerned about that. I think that would also attribute to greater volatility for equity prices.
Also, a lot of the spending is corporate profits being shoveled back into other corporate profits, and the wealth effect, regular profits for investors being shoveled back into the stock market again. How concerned are you about Main Street, about the consumer, given that we have gasoline still at $4 a gallon, and mortgage rates are obviously creeping up when you see the 10-year at 4.68 and the 30-year at 5.22?
Yeah, I am concerned about the consumer. We've had the data between sentiment and consumer confidence has been quite different, and that's unusual. And we've also seen a real difference between higher income consumers and lower income consumers. Lower income consumers are clearly under more stress. So that bifurcation is something that I am definitely paying attention to, and I think other investors should be too. The U.S. consumer never ceases to amaze me at our ability to just consume and buy and buy. I, for one, am an absolute sucker for a good Instagram ad. The amount of stuff that I buy because Instagram fed it to me just speaks to the consumerism in this country. And it really does buoy the entire global economy. So any weakness in the U.S. consumer would be cause for concern. And there is, like I said, a growing divide between the higher income consumers and the lower income consumers, which I'm concerned about.
Yeah, absolutely. So what would you do to hedge then, Shana? I mean, bonds don't look all that amazing at the moment, the way they're traveling. And obviously, the highs could be in some of these areas of the stock market. So what do you do if you just want to maybe take a little bit of chips off the table?
Yeah, so they call me the queen of alternatives because I love talking alternatives, and I love implementing alternatives in client portfolios and helping advisors do that. So Alternatives are far more available to the average investor, the average Main Street investor, than they ever have been before. They're a wonderful tool for risk management and to mitigate volatility in client portfolios. They're excellent diversifiers as long as your expectations are correct. So we run a separately managed account for Wisdom Tree in which we use ETFs to do that. So everything from equity market neutral, something like BTAL, to equity long short. There's all kinds of different ways, alternative income, and now there's products out there that are run by hedge fund managers that have been around for a long time, something like All W, which is a Bridgewater fund that is distributed through State Street. These are great diversifiers and can really help mitigate risk in portfolios in at times like this where there's a lot of uncertainty with traditional equity and fixed income.
How do you do your due diligence as an investor there, though? I know that you're particularly concerned about private equity and private capital markets and so on. So what do you do if you just need to find out a little bit more before you're willing to hedge in that arena?
Okay, now you're kind of teeing me up to promote myself, but I'll try not to do that. I do think that if you're going to get into the private markets and you're talking the less liquid stuff, so your private placements, your interval funds, you really should be working with somebody who really understands the nuances of not just the strategies themselves, but the structures. A lot of the problems we've seen in private credit have been due to structural mismatches. You really need the underlying investment liquidity to match the liquidity of the structure. And when that is mismatched, you have problems, big ones. And that's what we've seen in private credit, particularly with interval funds. Interval funds on their own are actually a great structure to allow traditional investors, Main Street investors, access to less liquid, but you still need to have that kind of quarterly liquidity. So from my standpoint, that's what you really have to focus on. So working with a professional, I think, can be really helpful. But with the ETF side, again, you just want to look at the type of illiquidity that might be included in a portfolio now, because some do have pockets where they can invest in less liquid securities. But other than that, I would feel comfortable and confident in alternative ETFs, especially in really liquid markets like managed futures and long short equity and things of that nature.
All right. Shana, thank you so much. Pleasure speaking with you today. That is Shana Sissel of Banríon Capital Management.